I don't read business books. I find business books to be not worth the time. There's a lot of problems, but then it's like, okay, but will you pay to fix it? That's an important sort of real world test of a concept is, okay, will they take out the credit card and pay for it? For someone who doesn't have the ability, again, to sort of make decisions, live with the consequences, like still sleep at night, they're probably not well suited to being a CEO. The founders always need to be the smartest, the most passionate, the most knowledgeable, the best salesperson ever. And all the salespeople can't be the founder.
What's the most effective way to grow with limited time?
I'll half jokingly say don't sleep and don't pretend to have work-life balance.
The idea that each individual person can have it all is in most cases impossible, and in a lot of cases puts pressure where it doesn't need to be.
A year or two before you actually want to sell it, start to build the visibility of the business. You always want your business to be bought, not sold. I've developed a structure for venture pitches where I compare a venture pitch to a 4-act play. And I say act 1 is,
Well, Peter, thank you for joining us. You have a pretty impressive board resume. Are you continuing to amass more roles to it, or are you pretty much at your limit right now?
depends whether longitudinally or horizontally. At the moment, no, because at the moment, I say my dance card is pretty full. But as these companies roll off, I will add more going forward.
And what is your impact for people kind of seeing this profile? How do you provide expertise or guidance to the companies that you're a board member of at a high level?
So I work with companies all different stages, from the very earliest, 2 guys, a Mac and a cold pizza, up through public company. Especially earliest stage, partly it's helping them figure out what the business model is, what the strategy is, how to present to investors. I've developed a structure for venture pitches that's been sort of widely shared, where I compare a venture pitch to a 4-act play. And I say, act 1 is, I've discovered this huge opportunity, a problem that's burning to be solved. And the second act is, and here's how we're going to solve it. And act 3 is, and here's why you ought to actually believe that we're the folks that can do this. And act 4 is, and if we do this, we'll all make money. In some ways, that becomes a starting point for conversations about strategy, market, TAM, SAM, competition. What it drives towards is, I'll say, operating discipline. Because I would say the 2 basic rules for founders are 1, don't run out of cash, and 2, don't get distracted by bright shiny objects. And one of the challenges for founders is, they're by nature, they always got great ideas, and their board has great ideas, and their investors have great ideas. And at the end of the day, they pursue all these great ideas 10%, and they don't actually get anything done, and they burn cash while they're thinking about things. And so one of the things I'm always really working with them on is operating discipline. Just okay, let's visualize it's a year from now, 18 months from now, and you're going out to do your Series A pitch. Let's imagine, what slides do you want to show? Like, what are the numbers that you're going to want to move, such as somebody goes, oh my gosh, this is a hot company, I really want to be part of it. And I would try to get agreement on those 3 or 4 things early on with your team members, with your board members, with your investors, and just stick to it. Say, that's a great idea. And we'll put that in version 1.5 or 2.0, because it's just too easy to start to question yourself and say, well, maybe not, maybe I should do something else, or maybe this is a cool idea. And so a lot of it is just sort of really commit to executing against X number of things and just stick to it.
I think that's probably it sounds a lot easier than it is in practice, right? For a lot of people. Where would you say the balance is between sticking with the plan, having the discipline to do that, versus pivoting when you need to and knowing what the difference is?
You're right. That's the hard part. One of the metaphors I use a lot is I say, it's like 100 and something years in, every dashboard of every car looks kind of the same, right? The big thing in the middle is speed. The next biggest thing is probably fuel or electric power, whatever kind of car you got. But it's like, how far can I go with this? Then there's another thing, which is probably temperature or maybe RPMs. And then there's 800 things, which are idiot lights, which you never actually see unless something goes wrong. And what I always try to say is figure out, what the top thing is and what the next 2 or 3 things are, and then try to execute against those things. One of the challenges is that investors have the attention span of a goldfish. And if you basically accept too much input they'll have you jitterbugging all around. And oh, wait, I just saw this. It's really cool. You should do this. And it's like, and you're like always kind of going back and forth, or chasing. Oh wait, you got to put Bitcoin in your pitch this time. Oh, you got to put AI in your pitch this time. It's always going to be one other. There's like some other business altogether. I think one of the things that I emphasize is real customers, that that your investors, maybe even the press, aren't real customers. Know who you think is going to buy this product and get as tangible a feedback as you can from those people. If possible, go ask them for money. Go say, hey, will you buy this? The more you've got that, I'm doing that now with a AI startup in the legal space, and it's like, look, go talk to a half dozen, and there's general counsels, so it's internal legal groups. I said, go talk to a half a dozen of them and see if they'll buy it. Because if at the end of the day, if you've got customers that go, yeah, actually, this solves my problem, and yeah, it's a problem that's worth paying money to fix, then you're on the track of a real business. And investors will blow hot and cold, but having a business that solves real customer problems is never a bad thing.
So it's essentially letting your customer base tell you when you need to pivot, right? So if they say no, we wouldn't, then you pivot, right? But if they say yeah, sure.
No, and I sort of slipped in a concept, and I've got scar tissue on this one, which is it's not just a problem, but it's a problem they're willing to pay to solve. Because there's a lot of problems, but then it's like, okay, but will you pay to fix it? I had an investment in a company, good product, love the CEO. And it was the problem of onboarding engineers. And it was, oh yeah, that's a real problem. Engineers, they're hard to recruit. They get up to speed too slow. They turn over too fast. We really need to fix churn and onboarding with engineers. So this gal invented a great product to solve that. And we did it for free. Everybody wanted it for free. And then it was like, okay, now you got to pay for it. Oh, no, not so much. And in that particular case, I just did a debrief with her not that long ago. I suspect the problem was that for the VP Eng to go to a CFO and say, I need money to do this, the first thing he's got to say is, I'm doing a bad job of onboarding my engineers. Because it's kind of like, well, wait, isn't that your job to like onboard and train engineers? So for whatever reason, when it came to actually asking for money, it was like, nope. I like it for free, but not for paying. And that's an important sort of real world test of a concept is, okay, will they take out the credit card and pay for it?
Things do get real when money gets involved. It's a good test. Could you point to a defining moment in your career that shifted you from operator to CEO or CEO to investor?
I think there's one defining, it's more of an evolution. It's shades of gray. One moment was somebody offered me a promotion to CEO. And I think, you know what? I'm not sure I want to do it. Why don't you promote the other guy? I like, he's a good friend. And he goes, no, he's not, we're not going to give him the job. We'll give this other guy the job, and you don't like him. So it's like, you do it, or you're going to work for somebody you don't like. So it's like, okay, I'll do it. One of the things, and it's not really the question you asked, but CEO is very, very different than being a VP sales, a VP eng, even a division manager, because of a couple of things. One is the level of sort of the mental scope of, you got to think about everything and how it fits together. Often you've got to trust people whose area of expertise you don't know. So I've always said that for me, my CTO is kind of like the proverbial left tackle in football. He protects my blind side because I'm not a technical founder. And so I've got to have a CTO whose judgment I trust for things that I don't understand and can't do myself. I mean, I've got an MBA, I understand the finance, I've sold stuff, but when it comes to actually programming, so the ability to hire the right CTO and replace it if it's not working is critical for a CEO, and not flinching, not kicking the can down the road. We had a coaching session with a CEO last week, and there's a couple of us on an advisory board, and we're all good friends. We're like, you realize that your CTO is a liability. Well, but no. He's a liability, and you can't build a business with a bad CTO. Uh, and and this particular CEO is a great guy, and he's loyal to his team. But it took a couple of us with like a more gray hair and scar tissue to say, no, this it's just we're playing back the fact pattern you told to us, and he's going to hold back your business. He's a liability, and and don't try to redefine his job, or is it, you actually just need to bite the bullet and get rid of him. And that's, as a CEO, that's one of the things you guys gotta be willing to do, is make the hard calls and still be able to sleep at night. And Becky, your earlier question about, well, how long do you persist versus when do you pivot versus, and there's never like written on the wall in red ink, oh, time to pivot. It becomes, that's like one of those decisions that the CEO has got to say, no, we stay the course, or no, we pivot, and you live with the consequences. So that's something, and you get better at it over time with more practice. But for someone who doesn't have the ability, again, to sort of make decisions, live with the consequences, like, still sleep at night, they're probably not well suited to being a CEO.
What's one unconventional habit or routine that has contributed to your success in business, Peter?
I don't read business books. Um, yeah, no. I was a English major with a history minor, so I read all sorts of literature. I went to Jesuit school. I had philosophy, I had theology, and I find most business books to be kind of overly simplistic and kind of a lot of cliches repeated endlessly. So I just have very little patience for it. I'll read a lot of history. I'll read a lot of fiction. I'll read a lot of all kinds of stuff. I'll read sociology. I'll read a ton of magazine articles, but I find business books to be not worth the time.
When scaling, let's say for an SMB owner that's trying to scale a business, if they are currently reading business books and it might not be helping them, then where else would you say they can get inspiration, or that they can learn some models or some principles that they can apply?
I will say one of the kind of areas I'm focused on right now in terms of scaling SMBs is, so the current preference is founder-led sales. Oh, okay, so don't go hire salespeople. You, Mr. Founder, go sell it. And that is actually a really good way to start, because it gets the founder in front of those customers we were talking about. But that's a throttle on the ability to grow, because first of all, if the founder's selling, he's not building the product, he's not raising money, he's not doing this, what he's got to do. Second thing is, the founder's always going to be the smartest, the most passionate, the most knowledgeable, the best salesperson ever. And all the salespeople can't be the founder. The purpose of the founder-led sales is to figure out what's the proposition, who's the target customer, what's the problem they've got, what's the pricing. But then you got to have the ability to turn that process over to kind of mortal coin-operated salespeople, who are just sort of ordinary money-driven salespeople who want to sell stuff. And you can't scale the business until you can make that handoff. And where companies get stuck is often where, what the founder was doing effectively was consulting, not selling a product. Oh yeah, that's pretty good. But I'll rewrite this part of it for you. Or, oh yeah, I'll change the terms for you. And then when the salespeople go out to do it, it's like they can't quite get the deals closed, because it's always like there's some gap. The critical moment is when they start to drive towards, no, here's the thing. It's a product. Here's who you sell it to. Here's the customer's problem. Here's what they can pay for it. Here's what they would buy instead. Now, just go talk among yourselves. Get it done.
It's making a system out of it, I think, so it can be repeated by somebody else.
Yeah. That wash, rinse, repeat is where, and I've seen a lot of companies at that sort of, like I said, also a lot of times founders, they come out of an industry or they've got relationships. And so the first set of sales is folks they know, folks like them, folks. And so they're kind of easy, low hanging fruit. It's like, okay, now to get from $1 million sales to 10 million, we got to go sell it to people who aren't exactly like us or who we don't know. Like I said, that's where you say, okay, no, it's repeatability, and it can't require Superman to sell every single time.
If you had to build a successful business today with just $500, how would you do it?
That's a tricky question. I've been experimenting like everybody else with AI, and I have been just floored by what you can do if you are good at AI. So what I would probably do with $500 is create a service business helping other people take advantage, who know less about AI than I do, to take advantage of AI. I put the $500 into Google Ads, and But it's funny. So I was had coffee with a close friend who's the head of AI for Logitech, and we were talking about, that's a 7,000 person company, publicly traded, and we're talking about all the ways they were going to use AI to transform the business. And this is more internally facing than customer facing. But we started to all the different things, everything from contract review to competitive product analysis to kind of saying what are the gaps in our feature set to what are our customer service problems. And it, it really does have the ability to be transformative. And so, yeah, I mean, with $500, I'd probably become the AI guru for small business.
Would your answer differ at all regarding a cohort that has time constraints? Maybe that's most of us. How can people manage, say, a full-time job or other significant commitments with a side hustle? What's the most effective way to grow with limited time?
I'll half jokingly say don't sleep and don't pretend to have work-life balance. Many years ago, because I was an English major with a history minor, I said, I better get an MBA because one of these days they're going to catch up, they're going to catch me out. And I'm going to say, you don't know anything about business. So I could not afford to. So at the time, to go to Stanford, you had to quit your work job for 2 years, go $100,000 in debt. I'm like, can't afford that. So I would drive from San Francisco to Palo Alto, 45 minutes to an hour each way. I'd work all day, drive 45 minutes to an hour back, go to school from 7 at night to 10 at night, do my homework. And so I subsisted on 3 years on caffeine and Visine. Was it fun? No. Was I exhausted? Yes. But that's what I did. I came out the backside with my MBA and a bunch of contacts. There's a joke in the Northwest that, Portland is where young people go to retire. And they kind of want to say, oh, I want to have a startup, but, I want to ski this weekend. I want to go out for my kombucha. I don't want to stress too much. It's like, well, God bless you. That's great. But that's sort of inconsistent with, really trying to build a successful business sometimes. I think, and this is something I think it hits women harder than men, but this myth of that you can have it all. It's like, oh yeah, you can have a job and you can have 3 kids and you can have a happy husband and you can play tennis and you can, and it's like, it would be lovely, but it probably isn't possible. And it's like, no, but like, so accept that the house is going to be messy, or, you're going to have to ask for help. But if you say, yeah, no, I actually want to I want to work all day and start a business at night, or I want to have a sort of a really significant second revenue stream, something's got to give.
It's interesting that you say that, Peter, because I absolutely agree. I think the idea that each individual person can have it all is actually, in most cases, impossible, and in a lot of cases puts pressure where it doesn't need to be. Whereas I would say in the past, it was more a household could have it all, and the roles are divided how they're divided, and it can be whatever way round. But thinking about it as an individual needs to have it all puts all of the pressure that a household used to have on one person, which is not unsurprisingly puts more stress and puts more expectation on.
I'll say particularly younger women judge themselves and they go, well, I should be able to do all of this. They tell me I should be able to. It's like, no, it's impossible. And you're being overly harsh on yourself if you don't say, no, actually, no, here's what I can do. And here's what I'm willing to do.
And know what's a priority, I guess, right? So if business is a priority, then what does that mean for the others? If family is a priority, what does that mean for the others? And being okay that there's a trade-off.
Yeah, accepting that there are trade-offs. A fellow that worked for me wanted to go through one of these. I don't do coaching per se, personal coaching, but his guys are friends. So he said, hey, help me sort this out. So okay, take 100 pennies. I said, okay, first exercise, write down all of the things you spend time on during a week. I said, okay, now allocate the pennies to those things. Where are you spending your time? I said, okay, now here's another 100 pennies. I said, write down what's important to you. Put the pennies against those things you said were important to you. Do the two line up? And no, they didn't, of course. And in his case, his father was a musician and he loved having his son play music with him. And honestly, my friend liked playing music with his dad, but he's like, but I've actually got a day job and I've got a kid and I've got a house payment. And I really can't, much as I love you, Dad, I can't go out and spend 3 nights a week in a bar playing guitar. And so it's like, okay, so after that exercise, okay, I guess I got to have a talk with my dad and say, no, I can't do this right now. Not at this stage of my life.
Out of interest, Peter, you referenced coaching. So you said that you don't necessarily do coaching yourself. Having built and scaled and exited multiple businesses, have you ever sought coaching yourself? Have you ever had a coach yourself?
Not a coach per se. And I'll say what I should say, kind of the full sentence is I don't do coaching as a consulting practice or I don't have a coaching shingle. I would say I wind up doing a lot of coaching slash mentoring for people I work with, CEOs and stuff. Just the nature of the relationship. Hey, how do I think about something? So yeah, so I've had people over time that I've said, hey, what do you think about this, or how would you approach that? But not a formal business coach. I know a lot of people who find that to be very valuable, but so for me, it's just been more ad hoc.
What's your approach to marketing when you don't have a big budget? Or have you seen certain strategies that work better than others that you could talk to?
But give you a little bit of a context and all.
Okay, let's say a media company.
Everything is in social media right now, right? So approaching social media with sort of intention and effort is important. After we finish this, I'll write a blog post about this on my website. I will share it on LinkedIn, and I will call up my friends and say, hey, I just put up a post on LinkedIn. Would you please reshare that to get the maximum distribution? In that particular case, it's creating it's creating the visibility through effort, and not being lazy. It's no, okay. It's posting stuff on X. I keep wanting to say Twitter. Posting stuff on LinkedIn, depending on your segment. It's again, and also it's sort of working the referral network. It's, hey, would you please? I posted this. Would you please comment on this? Would you please share it? Would you, and I've got a lot of friends, for example, that are building individual media practices on Substack, and that's a lot of that is referral based.
I had spoke to a gentleman who has like millions of subscribers to his podcast. He's been in the game a while, and he says he's seen like zero ROI on social media for podcasts. And his way of marketing for podcasts is by going on other podcasts. To him, in his experience, that's the only way that worked. But I wondered, was that like unique? Was it maybe his style of posting on social media was missing the mark? I was just curious.
No, I mean, it is like in the very early days, there were blog rolls, and you would like link to other sites, and that's still it's like whether it's going on a panel discussion, or you know um, a lot of the podcasters say, "Hey, I've invited David Lovejoy to come over on my podcast today, and check him out at such and it's like so no that's another technique that works that costs nothing and it's in everybody's best interest. But I think it's more that kind of stuff, which is the sweat equity, than it is, spending a lot of money on Google links or Facebook Marketplace or whatever.
Many people struggle with imposter syndrome. How did you develop the confidence to make big business moves? Was that just part of who you were from the jump, or did you kind of learn that, grow that, wear that throughout your career?
No, because usually imposter syndrome comes with like you inherit the family business or you got promoted into something that you didn't basically come up the hard way. And I would say I came up the hard way. So whatever I got, like I said, scar tissue, sweat in all the businesses. I learned them from the bottom up. So like I said, like, I'm not a technologist, but just about any other job I knew how to do. I knew how the sausage was made. And so no, and that's part of also, yeah, maybe it's temperamental. Also, it's like just you can't second guess yourself. It's just, especially as a CEO. A friend of mine had an expression. He says, you know, input not consensus. You listen to the team. They say, thanks a lot. Here's what we're going to do. Amazon, they say disagree but commit. And I think one of the most corrosive things in a company is when nobody ever believes a decision is final. When it's like, oh yeah, we said that, but I can go in and argue, or whoever the next person to talk to the boss is, they'll change his mind and we'll have a new strategy. And right now, so I'm feeling generally apocalyptic right now, and so because of everything in the macro environment, and so I've been much more focused on execution, managing costs, putting up numbers, and preferably putting up profits, just because we've been in a very cold, cruel world for venture funding for about 3 years now. There's been relatively few exits. There's a lot of walking dead. And companies were, and this happened every, call it 5, 8 years with venture, where they basically wrong foot their portfolio companies. They'll say, look, grow, 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 burn cash, don't worry about it. And then later on, it's like, oh, wait, no, forget that. You cut your costs, be profitable. It's like, whoa, hold on, stop. You told me a minute ago to do this other, yeah, but not, no, that was last week. This week, just saying,
Have you seen A League of Their Own with Tom Hanks as the coach, and he comes off his drunken stupor and he sees Gina Davis giving signs to Marla Hooch on, like, she's going into the batter's box and she's doing this like tap dance back and forth as they're kind of competing to give her signals. That's kind of what came to mind when you mentioned wrong footing.
yeah, no, but yeah, exactly. But then think it's like, wait, I staffed up, I spent money on marketing, I built this nice building, and they're saying, oops, just kidding, bare bones. But that happens, like I said, every 5 to 8 years. Like I said, the wind in the VC business changes, and the portfolio companies are kind of hung out. So we went into 2020 bullish, pandemic hit, and the world stopped for 3 months. Coming out of the worst of the lockdown into 21, there was a lot of deal making and very high valuations. Then interest rates went up, and particularly the private equity market froze. And so suddenly everybody's like, oh crap, you can't do an A round, you can't do a private equity round, and there's no IPOs. So suddenly the whole financial market is constipated. And so it's like, oh, we thought it was going to be easy to raise an A round or a C round. No, not going to happen. So that last money you raised is probably the only money you're ever going to raise. So make it last. And so even now, we're starting to see the private equity guys trying to unwind deals they did in 2021. And with that, typically is they've sort of been hoping that the market would bail them out. But now it looks like they're going to have to go back to their LPs and say, oops, just kidding. We paid too much. We're getting 50 cents on the dollar.
So moving into, I think this leads in nicely to your role as an investor. When you're looking, what do you screen out? What are the kind of things that you are bullish on, or I can say bearish, but really it's just not at all, right?
Well, no, there's bearish too. The single most important thing, but there is a link, I think in my bio and on the webcast for how do we consider how do we think about investments? There's an old cliche: bet on the jockey, not the horse. The first sort is the CEO. Do you believe that there's somebody who will succeed no matter what the world throws at them? And they don't have to succeed to being a public company, but will they succeed to call it 5 or 10 million of revenue? And then eventually they may say, okay, yeah, now I'm going to turn the reins over to somebody else who'll grow it through the next level. But it's that, but a big factor is this somebody I believe who can continue to raise more money? Because as an early stage investor, the money I give them is not going to be the last money they raise. And there are some folks who go, great guy, I don't think anybody will invest in him. So that's like one non-starter. Some businesses, you just look at it and you go, you know what? This requires way too much funding. No, it's like, so, until the pandemic, it cost Uber twice as much to give a ride as they collected. They spent multiple billions of dollars of investor money to build scale in a two-sided marketplace, right? Because for Uber to work, I need a lot of cars in a neighborhood. I need a lot of riders in the same neighborhood at the same time. Otherwise, the whole thing doesn't work. And so it was investor cash that sort of created both pools. And the elastic price was, like I said, literally, they're running a 50% negative gross margin. And so there are some businesses that when they come to me, you look at it, go, all right, so you're building a two-sided marketplace. How are you going to, and it requires a lot of these people and those people to all get in the same place at the same time. How are you going to do that? And you go, okay, you know what? You're going to have to raise, if you could raise $100 million, you'd be successful. If you can't raise $100 million, you won't be successful. So that's typically a business, regardless of its other merits. I go, nah, I'm sitting this one out. Now, like I said, I prefer businesses, like I said, so founder, clear customer use case, and great founders bring the voice of the customer into the pitch. It's okay. Here's this customer. Here's the problem they've got to solve. Here's why they can't solve it any other way. I'm going to fix it for them, and they're happy to pay me to do that. And then also, like going back to what I said earlier about the dashboard, they've got a kind of a clear concept of how they scale it. Of, how do we get from this sort of nice little business to a much bigger business that's interesting?
What are the key signs that it's time to sell a business versus keep growing it?
Another one of those, which way is the wind blowing?
Right. You mentioned that there's some founders who can get it to maybe 10 million, but they're not the ones to take it to 100. Are there kind of signals that come to mind that if you're seeing this, might be time to do that? Or is it very much case by case across the board?
Some of it has to do, I'll say, with market. Like right now, I'm really interested in finding homes for as many of my private companies as I can, because I'm feeling like I felt in late 2007, early 2008, that the market could go very south, and it may be a long time before it comes back. So it could be like one of those times where this is a really good window to execute a transaction. In December of 2007, I was sitting in a boardroom in Austin with one of my companies, and we had an offer for a C round of funding. We had an offer for $70 million cash purchase price. One of the VCs like, yeah, let's go, go, go. And I'm like, hang on, let's run the math. So if we raise the C round, we'd have to double the value from 70 million to 140 million for those of us at the table to get the same amount of money. And it's like, okay, so what is the execution risk? How long will that take? And like it was December of 2007, we took the cash offer. Great. The founder has a small island somewhere. If we had said, no, let's take the C round, we would have gone out of business. We never would have exited. We were done. It's art, not science. But one of my other bumper stickers is, I believe, casinos are paid for by guys who are at 10 o'clock at night, but wouldn't stuff their money in their pocket and walk out the front door. It's like, oh, well, if I'm good at 10, boy, by midnight, I'm going to be a millionaire. It's like, no, take the money, stick it in your pocket, say thank you, walk away. And by nature, I'm much more, I'll play the middles. It's like, I don't need the first dollar, I don't need the last dollar, but you got a clean win, take the money and say thank you.
I got excused from a casino in Jeju Island, Korea with a friend because we basically were hedging our bets and kept winning. It was just like little wins over little wins. And eventually they're like, okay, like time to leave now. Like, yeah. So it bought us dinner and stuff. It was fun.
Remind me to go to the casino with you, David, next time we're in the same city.
And also there are many cases where the investor's interests and the founder's interests are very different. We're not all on the same team here, because in many cases, particularly with the classic Sandhill Road VCs, their feeling is it's a unicorn or it's not, and a double, a triple doesn't do anything for their fund. Whereas as a founder, it's like, no. That puts $20-30 million into my checking account. That's plenty, thank you. But they're like, no, it's like, if it's not $1 billion, who cares?
It must be also tough looking for a strategic acquirer, because they might like one aspect of the business, but not another aspect. Or there might be kind of one aspect we agree on valuation, another aspect is like nothing. In those situations, are you looking at performing surgery and kind of selling like one piece of it to someone else? Or
sometimes, although that's often really hard. Reed Business comes to mind a few years ago, where and Ziff Davis has done this, where they start to kind of piece it out, and this one is left over. Let's see if we can bundle it with something else. It's best if you maintain like a strategic integrity in the business, and that there's a certain class of buyer. One of the things that you talk about, Becky said, what about types of presentations that scare me as an investor? It's like if they're building a company to be bought by Facebook, and that's their only plan. It's like, no, that almost never happens. I mean, it's like, it's beautiful when it happens, but it doesn't usually happen. So it's back to the notion of you build a sound business that multiple companies would want. Some different reasons, but they all want the business. Multiple companies want the business. That's sort of the better long-term path. And then it's a year or two before you actually want to sell it. Start to build the visibility of the business, because you always want your business to be bought, not sold. And you want, and so usually what happens is there's a bunch of people you don't know sitting in a room you're not invited to, drawing on a whiteboard and saying, all right, here's our strength. We got a gap over here. Who might fill that gap? And in the best of all worlds, somebody says, "Oh well, company XYZ, they're looking really good. All right, let's go. We should get to know them better." And so what you want to do is you want to sort of raise the visibility and again properly positioned, such that in that group of prospective acquirers, they start to think of you as a solution to their problems.
I want to pivot, Peter, into your outlook for the future, because you've mentioned a couple of times, I think you used the word apocalyptic. So you're getting the bunker ready.
That's my word of the quarter, apocalypse.
So I wonder, if we take the pandemic as an example, that of course so many businesses across the world suffered, hospitality in particular, but Zoom did very well, right? So there's always opportunity in the downturns and in the bleakest of times. Where do you see the opportunity if we do have a big fall off?
Zoom is an interesting case because they did really well during the lockdown and they ran up, and they've actually been struggling since then because it's really hard to kind of maintain that momentum. With one of my companies, we work with a lot of the consumer electronics companies. And first thing everybody did during the lockdown was, oh, I need a bigger TV. I need a new computer. I need a desk chair. I need a Game Boy. And after everybody bought those, the next in 21, 22, they didn't buy anything. They're like, no, I bought it last year. And so a lot of those guys, they had great years in 20 and maybe 21. And then 22, 23, it was like, oops, we're struggling. So one of the tricks is to go, okay, and then what? It's like, okay, that'll happen. And then what happens? Well, then what'll happen next? One of my best worst examples is when 20 years ago, W. Bush said, we ought to get rid of Saddam Hussein. He's an asshole. He's a bad guy. He was. And we did. And then ISIS came in. It's like, yes, he was a bad guy, but he's the only bad guy that could keep the other bad guys under control. But nobody sort of played out, okay, and then what will happen after we do that? And so one of the art forms is at this point to start to say, all right, if this happens, then what will happen next? If Trump tries to annex Canada, tries to turn Gaza into Trump world on the Riv, how does that ripple through the economy? In some cases, I'll say, what, I don't know, but so what I'd rather do is have cash and let the dust settle and then buy back in when I sort of have more clarity. So I mentioned I'm hoping to sell several of my private companies for that reason, is that we've got nice gains. Let's take them, sit on the cash, and then, and if in fact things go south, there'll be a lot of opportunity to, in the 2008 housing crash, I encouraged a couple of kids to buy houses. I see it's like the houses will never be as cheap as they are now. Go into Hawk, do what you got to do, but buy houses. And it worked out fine. Because again, also it's a question of personal time horizons. They're in their 20s at the time, the early 30s. Life is long. It's like, get a house, you'll be fine. If you're older, you don't have that much patience. And so it depends kind of which game you're playing depends on where you are in your life. But no, I like right now, I like cash. I like government bonds. I like dividend paying stocks. I'm suspicious of anything with a high PE or an allegedly strong growth story.
And to come back to what you said before about AI and about the opportunity there, would you say that that's the opportunity for the entrepreneur? So for investors, that's what you've said before makes sense. But let's say for an entrepreneur or for businesses, do you think AI is the way to go in the near future?
I am interested in, so there's I'll say the AI platform, the Anthropics, the OpenAIs, Gemini, like they're way up here. They're out of my league. What I'm most interested in right now is practical applications of AI. And again, back to and not just a AI on-ramp, which will, like 20 years ago in the early days of the internet, it was, oh, we'll build your website for you, or we're going to be the pet store of the web. And the fallacy was that somehow or other it was hard to build a website. And it was like, no, actually, it's easier for Kroger's to build a .com than it is for Webvan to build an entire grocery chain in a business that's huge logistics and low margin. And so the same thing is, I think, going to be true with AI. That in the short term, there'll be opportunities like do sort of little AI helpers for businesses. But I think the folks that will do well over time are ones that sort of think about how to do actually solve hard business problems using AI. Like I said, my friend working at Logitech is doing really amazing things, but he's rare. There's not that many people that are that good at it. But it's like, so, I'm there's one of my companies that's working with senior care facilities of all things. But senior care, they got all these process things. It's like, oh, we've got to do food safety training, and we've got to do it in Spanish and Tagalog, and it's got to be at a third grade reading level, and it's got to be consistent with the food safety handling standards in all these different states. Go. It sounds perverse, but that's actually something that AI is really, really good at, because they can adapt it. They can look at how is it different in New York than in Nevada? How is it different in British Columbia than in London? And then they can go, okay, yes, we've got a food safety handling training that works. I'm looking at, as I mentioned, a company, what they're doing is doing contract review, legal contract review, so that, particularly for commercial contracts, they can dramatically improve how quickly the general counsel group inside of companies can turn contracts. And it's like, okay, that's actually, really interesting, because salespeople always hate the legal department. It's like, what? I'm trying to make money for this company, and you keep slowing me down. It's like, okay, we can accelerate that. Or it's like, or the client stuck in a clause that says we'll be ISO compliant on this product. It's like, and the sales guys, yeah, fine, it's all good, nothing material. It's like, no, somebody's actually got to notice that and say, are we actually ISO compliant? And who can actually say whether we will become ISO compliant or not? And it's like, so, but that solves a real problem, and it's not likely they're going to build it themselves.
You and I share some crossover with Japan. You predate my first visit to the place. So I have to ask, what was it like back then? Because what I've heard is that it seemed like Japan was going to take over the world. And are there any kind of similarities to some of the kind of situation between the US versus China today, or is it a completely like apples and oranges? I guess specifically in terms of business.
Yeah, so when I was getting my master's, I got at San Francisco State, and we sort of, like Vancouver, were Pacific facing. And so, and at the time, the US was very concerned about competition from Japan. And that was from everything from steel, textiles, chemicals, autos, certainly, and semiconductors. And so I thought it was actually a really interesting conversation is, competition, international competition. And so some of the things that I sort of studied and thought about are very transportable. Some are but also I did a deep dive on the history and culture and business practices of Japan. I did a major research, basically a second master's thesis on U.S.-Japanese competition in semiconductors, and I work with the Ministry of International Trade and Industry. Much of the success of Japan in the 60s into the 70s was based on their culture, and much of the stagflation they went through in the 80s into the 90s because of their culture. And it's basically all the same thing. It was the mannered culture. It was the employment for life. It was based on layers and relationships. The nail that sticks up will be hammered down. I also did a lot of business in China, particularly work with International Data. I was on the Asia board. And IDG was one of the first publishers to work in China. We actually were the first venture capital fund in China. But China was, so in Japan, again, everything was by the rules, everything was a script. In China, the biggest issue was it was a free fire zone. We're doing business with the Red Army, and they're all trying to ace out each other. Rampant corruption. We'd start board meetings with who was arrested this month for corruption. But we drank a lot. In that case, And I think over time I employed like the children of the three different premiers. And at first I thought it was like, this is like some kind of weird tax. I think, no, this is like having a hostage. If Deng Xiaoping's daughter is sitting in the front window, nothing bad is going to happen. Yeah, I think the the most important thing I learned is the sort of the fallacy of the golden rule. Because you always say, oh, treat other people the way you want to be treated. It's like, no, treat other people the way they want to be treated. That, and particularly dealing with other cultures, they've got their own way of thinking, doing business, and things that may be just fine for you may be outrageous and offensive to them. And it's just really important to sort of understand how they make decisions, how they think about things. About 30 years ago, I was presenting research on brands at the Epson headquarters in Shinjuku. One of the findings was that in the US, people thought the Epson brand, quote unquote, wasn't as good as it used to be. And I was going to present this to upper, middle, lower, upper management at Epson, at the client. I had my own guy. We'd been through the whole thing. And but yeah, I was very sensitive about not offending them. So I present this, and my guy translates it, and they all start laughing and slapping each other on the back. And I'm like, what just happened? He goes, I don't know. And I was saying, I'm sorry, gentlemen, there's a couple of lines in this presentation I thought would be funny. That wasn't one of them. What's going on? No, just go. I said, gentlemen, either tell me what just happened or the presentation's over. And they kind of talk among themselves in Japanese. Okay, we've known that for a while. We couldn't figure out how to tell top management that we had a problem. So you basically just gave us the get out of jail free card, because we're going to go say this crazy guy Jin came in and showed this research. He's a guy Jin. What the hell does he know? But it was a way to you gave him a way to surface it without anybody losing face, because they could always blame it on the foreigner. And it was like, okay, I didn't see that coming. But in the sort of elliptical way, it's just like in Japan, one of the reasons they go out and drink at night is 'cause they can say things in the bar after a couple of drinks that they can't say in the office.
It's the third space.
Right. And it's like they need to say it. And the other guys go, I need to hear this, but it can only happen under the cloak of darkness.
And it kind of doesn't exist in the real world after. Like it just goes back to business as usual.
Right. But the thing was said. But that's like a classic example, though, of, why can't I just say this in the room like everybody else? Or why do I have to go through layers? It's like, no, that's just not how it works there. And if you insist on trying to do it that way, you'll never get anywhere. So that was actually like the thing you learn is, no, each country has a way that it does things. And if you want to succeed, you figure it out and work the way they work.
And even bringing it down to the personal level, each human has a way that they see the world and that they expect things to be done. And if I always say to my clients, my coaching clients, that have a problem with somebody in their team or with their, I don't know, someone in their life. And I'll always say to them, if you go throughout life expecting people to behave how you would, you're going to be disappointed all the time, right? It's the, like you said, what did you say? It's the fallacy of the golden rule.
Yeah. I mean, it sounds good. It was like, who couldn't like the golden rule? It's like, except the reality is it just doesn't work that way in real life. And at least try to understand how the other person thinks, what's important to them.
Definitely. That should be the golden rule of, I was going to say of business, but really of life.
Well, Peter, thank you so much for sharing some of your substantial wisdom and insights with us. Is there anything that you'd like to have the last word on before we close out this episode?
Well, we've talked a lot about entrepreneurialism, founding companies, things like that. For as difficult, frustrating, crazy making as it can be, getting a job where you have equity is ultimately important as far as building wealth. That most likely working for a salary is really hard to get ahead only working for a salary. It's if you want to sort of get enough, we've actually got something that approaches wealth. You put it away. You're not worried about paycheck or the house. You need to do something where there's equity in stock.
Great point. Well, where would you'd like to direct people if they want to get in touch with you or follow what you're doing? LinkedIn, anywhere else?
I'm on LinkedIn as everybody else is. And my website is HoranMediaTechAdvisors.com.
Well, thank you, and good luck with the transition.
It's been a lot of fun.